today for this, which is one of a series of webinars that we have in the bank on digital finance services in agriculture. The digital finance services, they are redefining the agriculture landscape, especially when dealing with challenges that have been constraining the sector, such as access to finance, supply chain. Apologies. Supply chain inefficiencies and market linkages. Through digital financial services, smallholder farmers gain access to credit, insurance, and savings solutions. From where we speak today, here in Kenya, is a country which has set global benchmarks with mobile money platforms like M-Pesa, which facilitate financial inclusion and enable secure cashless transactions for people here. Thrive Agri is advancing this narrative with its agriculture operating system, AOS, that integrates financing, logistics, and market access for smallholder farmers. India's AgTech startups such as Samunati and DFarm are leveraging data, technology, and financial instruments to revolutionize farming. Samunati's AMLA framework forces farmer collectives, while DFarm's AIMS integrates blockchain and AI to improve supply chain transparency and efficiency. Both countries, Kenya and India, exemplify the role of enabling policies and robust digital ecosystems in driving digital financial services adoption. Platforms like AgriStack in India and community-centric models in Kenya underline the importance of policy alignment and inclusivity. DFS have significantly impacted the agriculture sector in Kenya and India, particularly in financial inclusion, supply chain transparency, and productive gains. For example, on financial inclusion, the adoption of mobile money platforms like M-Pesa has been transformative, with a significant increase in the number of Kenyan adults with financial accounts, jumping from 42% in 2011 to 79% in 2021. In India, the Pradhan Mantri Jan Dhan Yojana PMJDY initiative has expanded financial access, and reporting that 78% of Indian adults had a financial account in 2021 against 35% in 2011, thus showing also a significant increase similarly to what we observe in Kenya. So the experiences of both countries highlight the value of innovation, partnership, and localization in scaling DFS solutions. Sharing these lessons and fostering partnerships between India and Kenya ecosystems will create synergies for wider adoption and greater impact. Emerging technologies like blockchain, AI, and IoT hold immense potential to further enhance DFS capabilities, and strengthening cross-sector collaborations and public-private partnerships will be essential in unlocking these opportunities and driving long-term sustainability. Thank you. Beryl, over to you.
Thank you very much, Isabella, for opening the webinar for us. And we really apologize for the IT issues we have on our end. I would like to introduce the first speaker, Anil of Samunati. Please go ahead and, if possible, present from your end so that we sort our internal issues. We are in a larger room so you can see the rest of the team. And apologies for that. Anil, over to you.
I'm sorry, Beryl, my screen says this browser doesn't support sharing. So I may have to take your help to share. Is that okay? Perfect. Thank you. So we'll get into the slide share mode. No, this is not the one, Beryl. The one you have just got. The team would have sent something to you about half an hour ago. Our technology challenges continue, and I'm sorry I'm adding to them.
Okay, allow me to try again.
Right.
Yeah.
You would have got it around 5:20.
One second then.
Sure. That's perfect. Thank you so much. So thank you, friends. It's good morning, good afternoon, good evening, whichever time zone that you are. It's wonderful to be here, and we thank the organizers for giving us an opportunity to share our work. Samunnati, the name represents collective growth, collective prosperity, and collective elevation. So growing together in a collective fashion is embedded in the name of the organization. We exist to make markets work for smallholder farmers. The belief is markets have been working off the farmer. Can we change the narrative and bring markets to focus on the farmer so that we'd be able to work for the smallholder farmers? And the tool that we believe can bring about this vision of Samunnati is by making the agri-value chains operate at a higher equilibrium. If you can remove the constraints that exist in the flow of goods and cash in the agri-value chains, then that would lead to a larger throughput, and a larger throughput would entail the markets focusing on the smallholder farmer. So the departure here I want to call out is Samunnati does not look at engaging with the agri-value chains from the dimension of disintermediation, but it engages from the dimension of increasing the throughput for the benefit of everyone in the agri-value chain. So that's a quick call out, and that's why we exist. We proceed further. Next slide, please. So a quick snapshot of who we are in terms of the scale and reach. We are an entity that works almost in the entire Indian subcontinent, in the entire country. And we are a 10-year-old organization. We have just completed our 10 years about 15 days ago. Has been an incredible journey, both from the learning perspective as well as from the scale perspective. Live to date, we have done a little over $3 billion of throughput in the entire agri-value chains. We focus entirely on agriculture and nothing else. So whatever we have done is in the agri-value chains. And we basically have two principal client segments that we work with, and we are happy that both these principal client segments, one is farmer collectives that represent the interest of the smallholder farmers, and the agri enterprises, which essentially move goods and cash on the agri-value chains, both put together have a robust scale that Samunnati is working on. Next slide, please. What we have understood is, since the context of the webinar in our understanding is proliferating the best practices, we thought we would share our understanding of the smallholder farmers and the agri-value chains with an intention that perhaps our learning and our journey would be helpful to the audience on the webinar. And we would also be able to offer Samunnati's learning to each one of you going forward. So the context of the smallholder farmers remains the same, which basically is understanding their hierarchy of needs. And we are inspired by Maslow's hierarchy of needs in terms of the smallholder farmers. All of us know that at the core of the requirement for a smallholder farmer is access to finance. And we just heard Isabel talk about the Jan Dhan Yojana of our honorable Prime Minister, and it focused on the entire access to finance from the dimension of the basic financial services of credit, of savings and insurance coming and being available to the bottom of the pyramid to foster financial inclusion. The moment you put the context of farming and agriculture above the basic need of access to finance, as a paddy growing farmer would require a 90 to 120-day credit to a sugarcane growing farmer who would need a 1-year loan, and hence becomes uh, hence access to finance in a customized fashion becomes a necessity, and that's the second order of need. And once we have access to customized financial services that are linked to the cash flows associated with the agri value chain, then the third order of need that becomes relevant is access to the markets. How do we then sell where it is better to sell? How do we buy the inputs where it is better to buy these inputs? And how do we make both the cost of inputs to go down and the realization on the harvest, go up and stretch the margin for the farmer? That becomes the next higher order of need. And beyond that is when you have access to markets is when you would want to get into niche activities in the agriculture in terms of precision farming, greenhouses, and exports in the context of Indian smallholder farmer. That becomes the higher order of need. And last but not the least, entities like World Bank, DFC, and others are providing the safety nets. Should for any reason any of the four needs result in an outcome that is not envisaged, is there a safety net so that the fall is not debilitating for the farmer? So if you take this frame of the farmer as the hierarchy of needs that a smallholder farmer need, next slide, please. Let us look at how are the markets, markets engaged, or how are the markets structured. All the markets in the agri ecosystem are structured around the marketplaces. Marketplaces basically in India are called mandis, and in your context they could be different, but essentially it is a place where everybody congregates, and farmer is basically one constituent, and often the most vulnerable constituent who comes into the market and driven by the market forces. So if we have to juxtapose the needs of the farmer, next slide please, we have to juxtapose the needs of the farmer to how to make the markets operate together in tandem. It is essential and necessary that we keep the farmer at the center. The moment you keep the farmer at the center and then synchronize, harmonize all the other players, whether it is banks or institutional players, all or the quick commerce companies that provide the B2C or D2C services, also many of the BFSI players like insurance companies and liability products that can go and bring the agri markets centered around the farmer as the core of why all the all the marketplaces operate. So a market which looks at responding to a smallholder farmer would require a farmer centric approach, and in order to do so you have to basically embark on putting the farmer at the center. Next slide please. The moment you put farmer at the center, then you would realize that the entire agri ecosystem starts making sense. You are basically looking at the individual needs of each of the subsectors within the agri ecosystem. You take inputs, you take tech platforms, you require services, products, and output. Just take inputs, for example. Inputs have seeds, crop protection, chemicals, and farm equipment. Seeds have further subcategories as genetically modified, open pollinated, hybrid, and what have you. And each of the companies are in those. All of them are basically looking at reaching out to the smallholder farmers either through their own dealer, distributor, retailer network, or through a multi-product distribution network of retailers, dealers, and distributors. And what that would mean is, how do we incentivize the channel rather than provide better services to the farmer takes priority. And the moment the markets become centered around the farmer, how do we harmonize that engagement of all the ecosystem players in the agriculture to look at reaching out to the farmer? And that is what Samanati has been looking at. You require an orchestrator, a Zubin Mehta, as we say, to be able to orchestrate the play between all the ecosystem players with farmer at the center. Next slide, please. For that to happen, you have to have a proposition for the entire agri value chain. You cannot just put farmer at the center and say, hey, I will work with the farmer, because farmer is one integral part of the agri ecosystem. While we are saying that let us put the farmer at the center, you cannot take the importance of engaging in the entire agri value chain, and this is what Samunati focuses on. Farmer at the center is the core, but then both the sides of the agri value chain, whether it is input manufacturer to their dealer distributor to the cultivation as a process, and then the entire post harvest as supply chain that is necessary to move goods and cash. How do we integrate all of that? And this is where Samunati's dual engine strategy would come to foray, where we look at providing the working capital solutions and market linkages for the agri enterprises on both sides by focusing on bringing the attention on the farmers and farmer collectives at the center. So the key point on this slide that we are making is you have to look at an integrated approach to the entire value chain, not just the farmer alone, with an intention to put the farmer at the center for everyone else to benefit from it. Next slide, please. The moment you put farmer at the center, given the humongous numbers that you have, is where we believe the aggregation comes into picture. And almost all the geographies across the world, wherever there is a reasonable density of population, are familiar with the collectivization. And so is the Indian context, where you basically put together, or you basically enable farmers to come together as collectives. As collectivization will bring in the power of bargaining, both for their inputs as well as for their output. And this is what Samunati has brought in as its genetic code, where we bring farmers in particular value chains together, and collectivization is the hallmark of Indian agriculture in any case, in different forms and shapes. But one form that is showing a lot of promise over the last decade and few years is a collectivization called farmer producer organization, an organization that works for and with the farmers. And cooperatives have been around for about 70 years in the Indian landscape. And of course, individuals who act as the village level entrepreneurs also provide the collectivization. So the point that we are making here is you don't need to necessarily have a particular legal form to harness the power of collectivization. As long as you have one aggregator in between, the middle B, you can always harness the power of collectivization to be able to do that. And the moment you bring in the power of collectivization, what gets unlocked are two kinds of capitals. One is the social capital, which is basically the familiarity of people within the collective. Second one is the trade capital, because this collectivization and engagement is happening in the context of buying and selling, because you are engaging in the agri value chain. Whenever there is buying and selling, there is a transaction history that is getting created. And how do you leverage this transaction history to be able to underwrite is what trade capital is. In other words, collectivization leads to two capitals, which is social capital, which is whom to lend, and trade capital, how much to lend. This whom to lend, how much to lend through a collectivization enables the collective to engage with the other agri value chain players on both sides on a peer level, with the strength. So that's why Samunati works entirely on agriculture, on collectivization. Now this approach, Isabella mentioned in her opening remarks that Samunati's AMLA approach. AMLA is an acronym for aggregation, market linkage, and advisory services. A set of farmers coming together as a collective is a starting point. They are coming so that what they can buy cheaper, and what they can sell, they can sell better and at a right time. The market linkage piece is where the working capital or availability of financial services becomes necessary, because the moment you move away from your traditional retailer network, you lose the social capital in the village or in the context of the market that you are operating. And market linkages usually entail larger quantities, and hence you need to go to the manufacturers. So the other side of the coin in market linkages is the financial services, and that's where Samunati plays a significant role. The moment you unlock the power of aggregation through the market linkages, then doing what you are doing in a better manner, which is advisory services, become extremely important. And as advisory services for Samunati also fosters a lot of collaboration with the other ecosystem players who are already providing a host of advisory services, whether it is satellite-based imagery and what to grow, how to grow, or a advanced weather warning in terms of how they can prepare the adverse weather. A lot would go in advisory services, and bringing this entire AMLA framework in tandem with the working capital structures is what Samunati's fundamental approach is. Next slide, please. The moment you unlock this AMLA approach, host of other services will become relevant for the farmer collectives, whether it is building their institution capability, because you are introducing many services that they are not familiar with, and hence we cannot leave it to them to be able to, become institutions from community owned, community operated entities, all the way to weather stations and input stores. And in a way, the collective would become a agri-economic zone in which every collective can potentially have one input shop for the inputs which can be stocked prior to the season, can become a advisory unit during the cultivation to suggest and help them through information and data, to an output collection center post harvest, and perhaps have a warehouse so that you don't sell the produce soon after harvest for better realization of the produce, and then do the primary processing and the tertiary processing. So range of services become relevant because now you are dealing with a, with a collective and a larger number of customers, and that this is where Sammunati brings in a lot of technology interventions, because there is technology available, and we will hear, I'm glad that we are part of this webinar where Venkatesh ji is also going to talk about DFARM. It's pertinent to bring in the digital data as well as tech enablers that we are seeing in the sector in unlocking this potential that collectives have. Next slide, please. I will briefly touch upon how we engage with two kinds of entities. One is FPOs which have a reasonable scale and are poised for significant growth, and FPOs which are still nascent and finding their feet. The nascent and the ones which have to find their feet, we basically handle them through our incubation services, so to say. But the lighthouse FPOs are the ones where we engage with them like how a wealth management approach for high net worth individuals happen. You have a dedicated relationship manager, all the services become relevant for them to be available, and you build both the institution capability as well as the financial muscle for them to grow. And these are lighthouses for other budding FPOs. And at Sammunati, we have about 120 such lighthouse FPOs that we are building. So the reason why we thought it is important for us to share this with you is, in your particular geographies and in your context, you may not have all the collectives at the same level of maturity, and you cannot handle all of them with the same intensity. You cannot have the one size fits all kind of a dimension. So you may want to pick the ones that have high growth potential and which are willing to make those investments both mentally, emotionally, and financially from our side. Then you would be able to move faster with them, and they would become inspiration for others to follow. And in order to do so, we have basically three platforms that we offer to them. One is the Smart Project, where we basically provide 4 marketplaces for all the FPOs. One is credit marketplace, second is the input marketplace, third one is the output marketplace, fourth one is the consumer marketplace. All of them are embedded within the Sammunati Mart or Sammunati Marketplace, in which an FPO can go and avail of all the services. The second one is the entire second one, the FPO Next is the entire platform of engaging FPO as an entity, as an institution. So transforming a nascent community owned, community operated entity into a large institution requires engaging with them in a holistic manner, and FPO Next is the landing port for all the FPOs. And then there is a way in which we do the grading. We then identify the areas of institution building, and FPO Next is also where we have put a lot of our training content. The last one is, unless the members are loyal to the FPO or members are loyal to the collective is of no utility. And this is where the app that we have, which the FPOs would provide to their members, the Kisan Pay, becomes extremely important. And we would be sharing more details with the organizers later. But all that I wanted to say is, it's a triple pillar approach that we have, in which we have the marketplaces, which basically facilitate the flow of cash and goods and cash. Then we have an entire incubation center that we call as FPO Next, where an entity goes through a metamorphosis, so to say, and then we enable the entity to engage with their members through an app that enables the farmers, the members, in making their engagement with the FPO digital. Next slide, please. We cannot not engage on this topic of climate and sustainability if we are engaging with collectives, and this is the right time to do that. And we wanted to quickly talk to you about sustainability at Sammunati, because this particular dimension is going to be critical in engaging the smallholder farmers, whether it is.
Sorry, Anil, could
yeah?
you wrap up in 3 minutes?
I think after this, there is only one slide, Beryl. I would be done. Okay. So the dimension of sustainability is relevant, and we cannot postpone all of this. Is why one needs to pay attention to the sustainability. Next slide is, where, next slide, please. Right. With all of this, these are the SDGs that we cover, which are also relevant. And if you need, no, go ahead, Beryl. Go ahead. Yeah, if you need any more information on whatever we have mentioned, please feel free to write on this, and we would be able to double click on any of this. If anyone is interested to know more about FPO Next, we'll be able to do that. On Kisan Pay, we'll be able to do that. And on the marketplaces that I mentioned, we'd be very happy to take you through that. Thank you very much for this opportunity. Beryl, over to you.
Thank you very much, Anil. Your presentation was very comprehensive. We appreciate it. Anyone who has questions, please post them on the chat, and we will summarize and ask Anil 2 or 3 questions that will not have been answered on the chat. I'd go ahead and introduce Babu, sir. I hope that you can take us through DFARM. You're the CEO of DFARM, on what DFARM does. Please try and keep it between 10 to 12 minutes, and we'll be happy to listen to you. Thank you.
Are you able to see my screen?
Yes, we can see your screen. Kindly put it on slide mode.
Yes. Yeah, thank you very much for everyone to join in the webinar and giving me an opportunity to present in this webinar. Thank you. And DFARM is a technology company, is more focused on post-harvest till consumer. And we are centralizing the entire data while using the blockchain technologies and artificial intelligence, big data, and other related technologies. That's what exactly we do. And by doing this, what happens is there is a lot of additional advantages we can get out of the tracking or compliances monitoring. You can also expect a lot more advantages. The one is when you are transforming agribusiness from trading to service industry, so that you can reduce the wastages, which is over 30%, that can be reduced drastically if you can move agribusinesses from trading industry to your service industry. The other one is integrate all the finance solutions like warehouse financing to the farmers that can leverage farmers to be more happy, as someone has said. Like, the farmers are taking some of the money for working capital and all those things during growing the product or produce. So that will help them a lot, so that we can centralize into the system. And boost the cash flow optimization to the market planning by selling the produce before harvest. So that every harvest, what happens is it may have like 3 to 4 days a shelf life. That day 1, it will be 100%. The day 2, it will be 75%. Day 3 is 50%. By 5th day, it's going to be 0 value. So if it's better, if you can sell your produce before it harvest, it can save you your money and even reduce the wastages. That's going to be another bigger impact in this. Then reduce the reliance of the working capital. So today, the most of the banks and everyone, they have a stringent financial model for all lending for people in the trading. So that's where, where you can leverage and the working capital for all the people, and removing the working capital requirement in the trade. That's going to be one of the major importance in this industry. That one of that can be addressed. That's what we found. And you can see in the right side, this is the mobile app of the farmer. The mobile app works like a node when it go to the farmer hands. Basically, we used blockchain technologies. We made a mobile phone as a node so that it can work like with IoT and all those things. Then we have actually, by centralizing the entire ecosystem, we are not developing the ecosystem, but we are bringing all the data of ecosystems. The ecosystem partners are like farmers, cold storage, warehouse, packhouse, processing centers, distributors, wholesalers, and retailers. And in fact, we can also bring regulators into the system so that you are centralizing the entire data. So seamlessly you can operate into that enhance the control of the operations for everyone will have their own dashboards in the distributed ERP application. Being we are using blockchain technologies, this is a distributed ERP application. So the major advantage in the distributed ERP application is the data you can precisely put which data is going for which company. Say for example, the first 50 farmers information is going to the respective cold storage. The cold storage can see only that 50 people data, not the rest of the people. And a cold storage, you are giving some certain information to the pack house, they can see only the respective data, not other people data. That's how you are able to leverage your technologies to the next level. Then the advantages of using AIMS technology, we are doing all integration and everything, the real-time data, end-to-end traceability, optimized resources of usage, then improved inventory and logistics management. Even today, you can see like, the truck tracking and inventory available, all those things, along with the regulatory compliances like Global GAP, FSME, or in India, we have FSI or any other compliances, everything we are able to monitor in the system before you are purchasing the product, or people can monitor those things. We have seen like a lot of malpractices happening in this industry, but the governments, the regulators are making stringent policies, especially in North America and Europe. That's there. It's becoming very, very important to sell their produce in these countries. Then you can see here, what is that we do, the DFARM. DFARM has a different applications that you can see the farmer with farmer produce and farmer demographics with all the information. There is an artificial intelligence we use here. So the artificial intelligence can say that, okay, the farmer has 1 acre, can produce a 10 acre and 10 tons of tomato, and he puts by mistake 100. Then the AI can go and say like, there is a flag that corrects there is something wrong data coming in. We need to understand in this space, the most of the people are using the technology, they're all high school dropouts. If those people are not providing the relevant data to the system, the entire system, whatever the data you have is wrong information. And you are making your system so user friendly to the people and bringing the relevant data, and the checks and balances has to happen dynamically in the system. That's where your success of the data always is most important. And even you have the the produce harvest schedules, then quantity schedules, so that you are much ahead of planning for the dispatches or the sales, that everything can be accommodated in the system. Then connecting with the working capital for the farmers, as like, as Mr. Anilji said, it's a Samanati or the banks or any other people, they're able to connect for their product. In the Indian context, I'm talking about, if it's a Kenya or anywhere in the world, the process of the produce process is the same. But think what happens is how we are able to implement based on the local situations. Somewhere the banks are friendly, somewhere the private financial institutions are friendly. You are able to integrate with everyone you want. That's where we say like 20% is the implementation, 80% is the application is available. And you can say in the same way, the collection centers, we are providing the QR codes in that part, so that if there is any complaints are coming from the farmer, that can be tracked immediately. And also we can value that what is the good quality, the excellent quality, good quality, and process quality or wastages that can be recognized the quantity wise. So the more of authenticity is coming from everyone. The produce is going from farmer, collection centers, cold storage, distributions, retailers, and everyone. And the produce shelf life extended only in the cold storage and the warehouses. Those things are connected with the marketplace web application. Then if you look at like, who is going to buy our application, how we are going to implement this application in the ground. If you look at the vendor, vendor is centralizing the entire thing, he is the owner of this application, then normally what happens is they will have like 1,000 farmers, 2,000 farmers who is supplying the produce to them. And there, it's everyone working with the company, with the organization becomes very difficult because the farmers are expecting a kind of agronomy services or field office services from the field, and keeping that kind of relevant data back into the system because they should not see any last mile surprises. So they will have a field officers like agronomist. Through agronomist, they can see the farmers. Say every agronomist can handle 100 to 200 farmers based on the producers. The produce goes from farmer to collection centers, cold storage, and pack house, where the vendor can see all the people data in his system by using his dashboard. Then the pack house will have a different products, like after segregation they can see the first and second quality go for a table variety, which has a higher cost. The third quality will go for a processing, and the rejections, the wastages is going to go for a recycling. So when it go for a processing, that the processing people again they can put their produce in the marketplace by using a DFARM web applications marketplace that will be connected there. And the table variety can go to the distribution centers and retail stores. It's a seamlessly they can track the quantity, quality, compliances, and even the price. The most important here, what happens is if you say the farmer price is like in $10, collection center is 1, cold storage is 1, pack house is 2, distribution is 1, and you can say all the prices can be calculated. There is no manipulation can happen, and also there is non-productive middleman also cannot come into the system to manipulate the prices. That's where everywhere, if you can look at collection center, cold storage, pack house, distribution, everyone you can fix the price, and any higher price is realized in selling, that will go back to the farmer. I have seen in India one of our client who used, he is actually pay the money back to the farmer after closing the entire system. This is one of the agribusiness pain points is it's not a data driven. Precision tracing is not available, dynamic marketplace, auto cost calculation. These are all the majority of these points are not addressed where the digital system can take care of it, that we have done through the DFARM. This is the DFARM dashboard. It's a most everything for every operator. It can be cold storage, pack house, or everyone in the system. They will have their own respective dashboard. They can see what they're doing, how fast the people can take a decision. Where they can take a decision within 30 minutes. That's going to be very, very important. That's where we are working on. All the QR code generation and everything is happening here. And this is one of the good thing, we wanted to encourage the small entrepreneurs. So most of the people, what happens is the people, they may have the packaging, but they don't have their brand in the national and international markets. So here what happens is, what is that buyer is looking at? Buyer is looking for the good quality. That means there should be certifications, then compliances. And what happens is they wanted to see the supply chain transactions, how it is going. By doing the QR code, if you can see, it's powered by DFARM. So the powered by DFARM, if they scan the QR code, it shows the entire journey from which farmer, which pack house, which cold storage, and who shipped, and when it was shipped, with the dates, time, everything, precisely the information is available for the buyer. That's where the consumer is getting a trust on the product to buy these products. And number 2, if you look at the second image, it's actually we are giving like DFARM, that means certifying the product. The third one, you can see the sourced and packed by the Green Orbit. Green Orbit is a small operations, and actually they had a lot of problem in getting these things. When they started using our application, they are able to take a 500% growth each year. Now last year they took 500%, and this year they're taking another 500% in the mango trading. They are able to sell their produce in Australia, New Zealand, Malaysia, US, and European markets. So here what happens is these small scale companies also can brand their produce in the international market. They can get the brand value. And here what happens is the DFARM name is taking it forward, saying like the quality produce. And the marketplace, what we have for the sales acceleration, supply chain financing we are arranging, market access increasing, tracking, and auto payments. When we were developing this marketplace, we were actually looking at what is the biggest challenge we have in the world. We have seen there is a product called Mangan Go in Africa, in Central Africa. No one is not aware of that high protein product, nuts. So this is the kind of platforms can bring the kind of leverage for a people. They put their product in the international market, which is the high quality product, and it's not sold properly. So here, if you can see this marketplace application, it's a precisely made, whether it's an organic, residue-free, conventional product, what is the kind of product you are getting it? What is the compliances they have? And is it a table variety or a processing variety? Precisely people can buy. And also you can see that if the supplier, they want to know, they can go here and find the supplier details, that since how long they have and what is their operations, how much trade they did, all the information about that particular person can be seen, and they can buy the product in online. They can actually buy the products even much earlier. Even right now we are selling mangoes going to be supplied in after April 15th. We started selling now for the next year. So that is the kind of pre-harvest sales we are doing it. And anytime if you look at the buyer and seller, connecting is becoming a bigger problem, compliances. There is a majority of the times the product may be very good, but the container is not cleaned properly. Or a truck is shipping the chemicals, then next shipment, they are actually without cleaning and everything or fumigation, they are putting the fruits and vegetables. This is where the SDGs and Bureau Veritas, we bought it, who is doing the certification and building a trust. The trust goes between this, trust we are developing. The DFARM is connecting with the both seller and buyer by looking their history, compliances, and all those things. Then we can also use the SDGs and Bureau Veritas. They can actually update their certifications. That's why the produce can go from the seller to buyer, and even the vice versa, the money transactions. The buyer and seller has a lot of trust issues. That's where the DFARM is creating a trust. The other one is the collateralization.
2 minutes.
Yeah, this is the collateralization. This we have integrated into the system. Then we use actually the technologies is the blockchain, big data, software as services, Internet of Things, artificial intelligence, AWS cloud. And the international trade and marketplaces, these are all the major challenges for the streamlining facilities, accelerating the produce markets is becoming more and more important. And SDGs, if you look at, we are addressing a 10 of 17 UN SDGs. So this is where we are doing it. The entire application, if you look at, these are all the ones coming in. And we have the dashboard, then laptops, then the field officers are using tablets and farmers are using mobile phones. The DFARM is not only a technology company, it's a DFARM is an opportunity for many people who wanted to start their career in this, and they can be a part of any of their services with a low investment, and people, they can make a bigger impact. That's where the opportunity is. And for buyers, it's a trust. For the globe, it's a future. That's what the DFARM we built. Thank you very much. And some of the screens what we have.
Thank you very much, Venkatesh. We appreciate your presentation. We'll go over to you, Bernard. Bernard is the country manager for Tribe Agric in Kenya. Bernard, please go ahead and try to keep the time since we are running a bit late. Over to you.
Thank you so much, Beryl and the team. My name is Bernard Juma, as Beryl mentioned. I work with Tribe Agric Kenya. At Tribe Agric, we are a social enterprise that offers end-to-end services to smallholder farmers. Our mission is to build an Africa that feeds herself and the world. And we do that through unlocking Africa's largest economic engine, who are the smallholder farmers. So we run our operation with the help of our custom-made app platform called Agriculture Operating System, AOS, which offers end-to-end services to smallholder farmers. Which offers end-to-end services to smallholder farmers. Through the platform, we are able to onboard smallholder farmers, be able to collect all the necessary information, that is the location of where the farm is, be able to check the actual size of the smallholder farmers, aimed at doing the credit scoring, so that if you are linking these smallholder farmers to financial institutions or banks, they are able to get the information that is required by these institutions to advance credit to these smallholder farmers. As we may all know, the smallholder farmers are the most marginalized group when it comes to financial services or access to finance, because they basically lack the information that is needed by the banks to make the decision whether they qualify for loans or not. So through our platform, we are able to collect this information, be able to track historical yields of their farms, so be able to trace how the cash flow of individual farmers, so that we can support the lending to these smallholder farmers. Through the same platform, we are also able to offer advisory services and monitoring of the farms from across all different stages of crop production, from land preparation up to harvesting, and also offering trainings that are tailored towards to ensure that we support these smallholder farmers to improve their productivity and in turn be able to increase their income. So we promote data-driven best practices through the same platform. And at the end of the day, we are also ready with through the same platform to ensure that we are offering ready market for these smallholder farmers. You realize that the smallholder farmers, they basically depend on these farms. The farming activities, they are everything. They get their food from this. They need to get school fees to be able to also just put the daily bills from these farms, and such. They need to sell immediately after harvest. So as Thrive Agric, through the platform, we have been able to map a world-class group of off-takers and processors that enable us to provide market services to these smallholder farmers immediately after harvest. And through the same platform, we are able to ensure that we are paying the smallholder farmers on time. Once they deliver the produce to the agent stores, we are able to pay them directly through their mobile wallets. So just a brief overview about our platform. The platform has been developed in-house by a team of 40 team members. The platform is cloud-based and has the data harvesting capabilities for large farmer data sets, and the platform also works offline. We may also understand that in Africa, most areas face challenges with internet connectivity. So we have been able to ensure that our platform works offline to ensure we address the challenges of connectivities in the rural areas where most of smallholder farmers are based. The platform is made up of 3 apps. The first one is the agent app that does the farmer onboarding and the first level credit check, data collection, and advisory services to smallholder farmers. We have also a warehouse app that manages inventory from purchase of produce at the agent stores where the farmers deliver, and also tracking it until it gets to the buyers or the processors that we are working with. We also have the marketplace that facilitates the sale of crops, the world class of takers that we have, we are working with. Through the app that has been linked with M-Pesa, our agents are able to request farmer payments that is sent directly to their mobile wallets within 15 minutes of delivering produce. And once the produce has been checked by our agents, that it conforms with the market requirements. Like I mentioned, our platform is highly scalable, and the technology supports farmers from cultivation to harvest and works across different geographies. So how is Thrive Agric enabling digital financial services? Like I mentioned, the smallholder farmers have for long suffered because they don't have access to finances. But as agronomists, we are always advising the smallholder farmers to do timely planting, to use the right quality and right quantities of fertilizers. But what we have not been able to support these farmers, and what they basically lack, is the finances to ensure that they get the quality and the good quantities of fertilizers or other inputs on time, and so that they can also invest timely on their smallholder farmers. So through our platform, by collecting the historical yield of and farm size and the data and the geolocation of these smallholder farms, we are getting the information that is needed by the traditional banks to ensure that it advises them on how to finance these smallholder farmers. By doing this credit score, we are able to ascertain and weed out the farmers that we think are potential defaulters and be able to ensure that we support the farmers that really need the financial services, and to ensure that they are able to invest timely on their farm to support their activities. Through our platform still, we are enabling timely disbursement of loans by what I've mentioned, the credit scoring and being able to just know the right smallholder farmers to support. We are also supporting financial inclusion through our platform. Like I mentioned, we are able to train these smallholder farmers on financial literacy. We are able to develop training materials, and in return, this is ensuring that the smallholder farmer network that we are working with their financial health is improved. They are able to make good to do proper decision making, because we have trained them on budgeting and also all that it's required to ensure that they maintain a healthy financial lifestyle. So through the financial education and training through our platform, we are able to send out targeted SMSs across different stages of crop production, and also just having physical trainings that we conduct at the aggregation and farmer engagement centers in the villages that are managed by our agents. How digital financial services links with the SDGs and our work at Thrive Agri. Number one is on poverty, no poverty. We are working to ensure that the smallholder farmers are financed and are able to go ahead with their income generation activities on time. We are also working on zero hunger, just as our mission suggests, building an Africa that feeds herself and the world, because we want the smallholder farmers to increase their productivity by ensuring they are timely investing on their farm. When we pay them on time, they are able to buy fertilizers and other inputs that are required. They are also able to improve their livelihood. And on gender equality, we are also supporting women. Most of the agents that we are working with in the societies are the village-based, the VBS are women and youth in the society. And we are supporting them by providing also decent work and economic to support economic growth. Most of them will not get the opportunity to get the white-collar job that everyone desires. But through working with us as agents who support distribution of input to smallholder farmers, and also being aggregating from smallholder farmers, they earn a commission, and some of them have really, this has gone a long way in transforming their livelihood. So through our innovation, we are also supporting industry innovation and infrastructures that are going a long way to ensure that we support the financial inclusion among the smallholder farmer network that we are working with. And also we are cleanly reducing inequalities in the society. We are on a mission to transform the lives of smallholder farmers through sustainable development, being able to do job creation and ensure income generation among the smallholder farmers. We have so far worked with over 800,000 smallholder farmers across the globe, with 152,000 of these being female farmers. Our impact today, like I mentioned, we started our operation in 2018, and we have so far been able to disburse about over $150 million in loans to smallholder farmers in 4 countries, that is Nigeria, Kenya, Uganda, and Ghana. This has gone a long way in improving the livelihood of over 800,000 smallholder farmers network that we are working with, whereby we have been able to improve their productivity threefold and income also been able to grow twofold. The core crops we are working with are rice, maize, soybean, sorghum, and wheat. So we have been able to learn some few lessons that we would love to share with the team. Number one is localization. DFAM mentioned during the presentation that we are working with the smallholder farmer and networks. Some of them are for high school dropouts, and it's true. So we have to, if you are going to bring out technologies, we have to ensure that these technologies are simple as possible and built with an African context in mind. Number two, trust is also an issue, and we need to ensure that we work with local agents, and as Thrive Agric, we have been able to collaborate with local organizations on the ground, the likes of Safaricom and M-Pesa, to ensure that our technologies and impact is felt as soon as possible. And M-Pesa has been key in ensuring disbursement of money to smallholder farmers. When it comes to market linkages, we are able to pay smallholder farmers on time, once in 15 minutes, within 15 minutes of delivering produce to the agent store. And speed. The smallholder farmers are typically the most impatient people, sorry to say so. And so they need, if you're building technologies, they should be the ones that are going to solve these problems with speed in mind. AOS integrates directly with other apps, the likes of M-Pesa, and this has really been able to push out our impact as very fast in the locality. That's been my time. Thank you so much. We'll be ready to take up any questions. Thank you. Back to you, Beryl.
No problem. Thank you, Bernard, and thank you for keeping time. I know that was rushed for you. Stay online. I will ask each of you one question. I'd like to introduce our discussants, Lina and Hada. I'll start with Hada since she's here, so that they will tell us what they have seen on DFS and what the learnings are around DFS. Over to you, Hada.
Thank you very much, Beryl. Good afternoon and good morning, everyone. It's a pleasure to be here to be a discussant of this very important topic. As we all know, financial inclusion is really critical for achieving the development objectives of Kenya, where we currently are, but also all the other smallholder farmers. One trend that we observe is that while there has been tremendous progress for the inclusion of urban households in the financial system, the poor rural farmers are lagging behind. For example, in Kenya, 70% of the smallholder farmers are lacking access to financial services, meaning savings, insurance, and credit. And we all know the reasons behind this low financial inclusion, and it could help perhaps to summarize them. And these are basically boiled down to high transaction costs, also asymmetric information. Smallholder farmers, they tend to live in sparsely populated locations. They tend to be small, but they also engage in risky activity, which is agriculture. And as we know, agriculture is mostly a rain-fed activity, which means that it's subject to weather variability and other shocks. So the solution for financial inclusion is one that addresses all of these three constraints of small-scale isolation and risk. And here we heard from the three presenters how these three innovations are attempting to solve these issues. Now, of course, there have been many analog solutions to financial inclusion, but they, as we know, they tend to fail because of the same constraints that face smallholder farmers. Now, the question is, what is the role of the World Bank as an institution that works with the public sector in solving this financial inclusion issue? And I think it would be good to have a discussion on how we can first encourage innovation, how we design systems to deliver this innovation to farmers, and how in that process we ensure that there are no people left behind. So which means reducing the digital divide that we usually observe among the really vulnerable population. Even among smallholder farmers, there are vulnerable farmers, women, and the marginalized population. So I think it would be good to hear from the speakers today about their business models, perhaps some insights into how they mobilized funding for their activities and what type of public support they received. But looking at the trends in terms of innovations and also some of the thinking that has been done within the World Bank, also with other partners, there is a strong case for the digital public goods, an investment in foundational data, for example, that provide information on smallholder farmers and allow innovators to design even more tailored products. And for example, in Kenya, through the big data platform that's supported by World Bank projects. We registered almost all the farmers in Kenya, 6.4 million farmers who have access to all, who have information on all their activities, their geolocation, which is a treasure for innovators who want to design products that fit the needs of these farmers. But now the question, which is also under discussion in Kenya and other countries, is how can the government safeguard the data of farmers and also share it with innovators while making sure that there is no harm for the farmers. We can think that data on a farmer is equivalent to its private data because it's data on their own production, on household, revenue. So there is a need to think in terms of how to safeguard this data, but also without hindering innovation. So how to share it without hurting the farmers. The other question is how to make sure that the innovations provided to farmers are actually effective. As we all know, there is a huge progress in innovations in terms of data. And as we saw from the three presentations, there are really complex algorithms, artificial intelligence, intermediate algorithms that are perhaps obscure for most of us. So it is very important to ensure that the algorithm used, for example, by the AgTech to calculate the credit score are really doing what they are supposed to do. They don't have biases towards, for example, certain populations, certain types of farmers, etc. So here also there is a role for the public sector to ensure the quality, and I would be interested in hearing the views of the entrepreneurs we have today on how to make sure that their products are actually accurately measuring credit scores. Another concern was also with the insurance. I know we don't have representation from insurance, which is a key pillar of financial inclusion. We all know that it is a promising product for smallholder farmers. It insures against shocks, but at the same time, the recent trend is towards using more complicated data and algorithm to generate predictors of losses and generate payouts based on these complicated predictors. So here again, it would be good to have a discussion on how to make sure that these products have a good quality and that they end up serving the farmers instead of hurting them. The second point I wanted to raise, and I'm looking at it in my notes, is the issue of competition. We saw from Salmon-Landed, for example, and T-Farm, this trend of creating really innovative platforms that link farmers to advisory services, to markets, to financial services, which is really a marketplace, and it's very innovative and promising. But then the question is how to make sure that not a single operator captures the whole market, for the whole digital market, like it becomes an Amazon of the digital innovation space. So here again, it's good to have a discussion with between the public and private sector on what type of measure need to be put in place to ensure that there is competition in the space and that farmers are not hurt in this process. But I think overall, it is very clear that these three innovations, really want to commend them, the entrepreneurs here today, for the innovation, and they are really filling an important gap in terms of digital financial inclusion. Very promising innovation. And now it's for institutions like ours, for the government of Kenya, for example, to think about how best to deliver these innovations to farmers. What are the institutional setups that we need to put in place to make sure that these innovations reach all the smallholder farmers and have the impact that is intended to take place. Thank you very much.
Thank you. That was my colleague Hada. I'd want us to move to our next discussant, who is Lina. Lina is a financial sector specialist with SIGA. Lina will help us understand how we can bridge traditional finance with DFS, but also how to create better financial systems for smallholder farmers, since that's her area of expertise. Over to you, Lina.
Thank you, Beryl, and thank you for inviting me to be a part of this discussion. Very interesting to hear from the three entrepreneurs earlier. On kind of bridging the gap between traditional financial services and digital financial services, I think, you know, for any segment, including smallholder farmers, it can be difficult to make the switch from analog to digital financial services. So a few things to keep in mind as we think about serving smallholder farmers, and as Anil mentioned earlier, really keeping the farmer at the center of all this. So first, I think it needs to be a tech plus touch play, a phygital model where someone, typically a trusted family or community member, is available to show them how to go about conducting a transition, either on their own phone or on that of the other person. We've seen that even when individuals are aware of what they need to do, they often hesitate to take that first step in getting started on the digital financial services journey. So having someone kind of handhold them helps them build the confidence in themselves for them to transact, eventually assisted, but initially assisted, but eventually independently. Also, I think to Bernard's earlier point, we have to keep in mind that it's not digital financial services in isolation, but bundled with financial and digital literacy, so that they're really optimizing the benefits of digital financial services. We know that even those that use digital tools for a wide range of use cases may not use them for financial services. So this component is really important as well. And I think tied to this is the need to raise awareness about the risks associated with digital financial services, how to minimize them, what to do in case of fraud. I think it's important to keep in mind that while there are tremendous opportunities that digital brings, the risks are also enormous and in often cases exacerbated given the speed and efficiency of digital. So, you know, in addition to protecting, ensuring, you know, customer protection principles and being proactive in customers protecting themselves, we also want to make sure that we aren't losing customers to financial services because of a negative experience with a digital financial service. And I think ultimately we just need to ensure that the digital experience is equal to, if not superior to, the analog experience. You know, as is the situation in any situation, there's always some friction associated with changing behavior. So there really has to be a real reason, a compelling use case for customers to switch to digital. So, you know, providers really need to think about what is the experience of that smallholder farmer, and how is it being improved by switching over to digital. And on the provider side, I think in terms of them integrating digital solutions, important to keep in mind that financial institutions at the end of the day are running a business, and integrating digital solutions has to be at the core of their business or a business strategy. Otherwise, it will not work. There needs to be a clear business case. I think even when there is a desire to move towards integrating digital solutions, it may not happen because they are unsure about the value it will bring to them as a business, in which case external support to allow them to experiment or play around to test the hypothesis might make sense. And once that case is proven, then they might be inclined to do more on their own, bearing the costs associated with the digital transformation. I think this is especially true for more established financial institutions or those with a longer tenure who would need to do a lot more undoing than newer players. And I think this is where someone like a CGAP comes in sometimes to kind of test certain hypotheses, try to demonstrate a business case. And once that proof of concept is developed, then it's up to the organizations themselves to kind of figure out how this fits into their larger business. I think in instances where organizations want to integrate and might be willing to bear the cost, they might not know how to, in which case they require technical assistance or specialized targeted support. An organization, for example, that lacks the in-house expertise or capacity might benefit from looking elsewhere to access those resources and expertise. I think often instances, financial institutions might be encouraged by hearing about experiences of similar organizations and integrating digital solutions. So some sort of peer exchange arrangement could be helpful, especially where the focus of the discussions are really squarely at the dilemmas or the pain points on the financial institutions that are looking to integrate digital. And in terms, I think your second question, Beryl, was around creating a financial ecosystem for smallholder farmers. I think all of the panelists have talked about how they work in partnerships with other entities, and I think partnerships with diverse and multiple stakeholders are really the way to go in ensuring that the smallholder farmer, is served with a holistic suite of solutions, both financial services and non-financial services. We all know that smallholder farmers need a suite of product to meet their needs. And we also know that it's not financial services for the sake of financial services, but to enable them to improve livelihoods and build resilience. So partnering and partnerships allow each stakeholder to play to their strengths, do what they do best. Capacity building organization play an important role in financial digital literacy component, for example. FSPs focus on the particular product that they specialize in, and it might require different types of FSPs to come in with insurance, credit, saving, and then for them to come together in developing a basket of products that meets the needs of the smallholder farmers. It also requires us to think somewhat creatively about the types of stakeholders that are involved. It could require a design firm, for example, to be involved in the actual design of a financial service or product, or in its delivery. I think all of our panelists talked about the role of data, but I think partnerships also thinking about the role of data, using data that's being generated by different stakeholders to better assess and understand farmer behavior and their needs, to ultimately be able to serve them more effectively. I think partnerships also to think through delivery channels of financial services to smallholder farmers so that it's really meeting the needs of those smallholder farmers and in a manner that makes it easy for them to consume. And I think ultimately we know that smallholder farmers are not a monolith. There is no one size fits all approach, or they aren't usually effective. So solutions need to be tailored to meet the specific needs of those smallholder farmers. I see that we're very close to time, so I'll stop there. Thank you.
Thank you very much, Lina. Thank you, Hada, as well, for your discussions. I'm going to ask each of the panelists one question, and I'd like you to keep your answer to 30 seconds so that we try and finish on time. I would start with you, Bernard. Remember, your answer should be in 30 seconds, so make it spank. In Kenya, we know that data privacy is very tight. So when you do credit scoring, how do you encourage your farmers that whatever information you have about them will not get out and you're doing credit scoring? Bernard?
Thank you, Beryl. So we normally educate the smallholder farmers about the issue of data privacy, and also we sign with them through when we are collecting this information. We ask for their consent whenever, so that we are able to share this information. If we have to share this information with other service providers like the banks and the rest, so they have to give us that consent. Thank you.
Appreciated. Over to you, Anil. Working with cooperatives, FPOs, they are supposed to be almost self-sustaining after 2 or 3 years of hand-holding. What has been your key challenge integrating your solution with cooperatives that truly want to scale and find that at times data literacy may be a problem, working with farmers may be a problem, but they're willing to adopt technology? 30 seconds.
Right. Beryl, more than the challenge, I would say what has been the enabler or the key differentiator between entities that have made it and entities that struggle. It is the quality of the leadership. The moment you know that the quality of leadership is open to test out the technologies and open to commit themselves to the experimentation and adoption of technologies, we have seen significant traction in our engagement with the institution building of the FPOs. And this is where entry of younger talent into the senior leadership of the FPO is so useful. That's what we would that's what we have seen as a key differentiator.
Thank you for that. Very insightful. Last question goes to you, Venkatash. Rural area barcodes and smartphones, how has that been an experience for you?
Yeah, it's not a challenge today. You can see anywhere in the world, people are using smartphones. And generating a QR code is not a bigger technology what they need to use. It's already integrated in the DFARM system. And using a barcode, printing a barcode, and using a barcode and tracking through the barcode, technology is all available. And I truly believe that agriculture is not a new industry where we are working in. It's age-old industry, but the agriculture is going to be technology-driven industry going forward. That's where the future we can see. The average farmer age is growing every year, year by year. You can see the average farmer age is like 61 years in the US, most of the states, and North Dakota and South Dakota is 74 years. There is no young farmers are coming for it. Creating a trust on those people that they are able to survive in agriculture industry is going to be the key role. And these people are tech savvies, and using a QR codes, QR codes is not at all a problem. And barcodes are giving a little information. QR code is giving the more information that they are able to leverage on the quality of the product. Either the produce is coming from the wastewater like city drainage water or the river water, or from where the product is coming from. That's the tracking is more important to trust and buy the product. If it's a fruit or vegetable or anything, the trust on the product is more important. QR codes are going to play a major role in this industry going forward.
Thank you very much. And thank you for all my panelists and discussants. We were happy to have you today. I'll hand over to my colleague, Luke, for the closing.
Thanks a lot. Another exciting seminar. Clearly, each time we are exposed to all the new innovations, it's flabbergasting to see what's happening. This is just one other in the long series of seminars we've had on digital agriculture. Thanks a lot to the three presenters, Anil, Bernard, and Venkatesh. Clearly, you show that it's feasible. At the same time, I think what the panelists or the discussants also highlight, there are still a number of questions. Some of them we didn't really have a chance to put our finger on or really discuss deep. I think with the providers, there's still the challenge of the business model. Who pays? Is it self-sustained? What's the role of the public sector? Clearly, Hada highlighted the role of foundational data, the role of the regulation, competition, lack of competition, etc. Sort of potential dangers down the street. But so that remains an issue, I think, and a very important one. On the customer side, I think was very highlighted. Are these the types of products that the poor actually want? Are these products you deliver? Do they take sufficiently into account the attributes that the customers may want? Now, many of these products may not be business to customer. They may be more business to business. So then may be less of an issue. Myself, I'm actually engaged here in Kenya to look at digital agriculture and jobs and sort of see how these digital tools can facilitate increase in incomes, uptake, etc. So I'm very curious about this, and we need to learn more on why it works, what works, is it self-sustaining, etc. So I think on the one hand, clearly exciting to see how many of these applications there are and how far advanced they are, and then you show use. On the other hand, I think there's still questions, and that then opens up a big space for learning together and moving forward. So with that, I think, as I said, another step in our ongoing journey of learning, collaborating, and innovation. And encourage you, in the name of Ramesh Shah, who is the leader of this program, this seminar series, to stay connected with this series, the What's Cooking Digital Agriculture Learning Series. We will continue to explore pioneering ideas and partnerships that empower the farmers and drive progress in agriculture. We'd also like to thank once again CGAP, the World Bank, and the government of Japan for support in making this session possible. Thanks a lot. Have a great day, and up to our next session. We will take the lessons from this one. Thank you.
Thank you. Bye-bye.